Well, I mean, first of all, you have to understand just what happened prior to the drop, how much the metals were up. So even though silver's way down, I mean, it's still $76. It's 50% above the double top from the all-time record high. So we still have a breakout in silver. Yes, gold's pulled back from over 5,500. It's now about 4,600. But that was a record high a few weeks ago.
Mhm.
So, the metals have still made a lot of progress. In fact, even though gold was down $500 on Friday, the last day of the month, it was still its best January ever, despite the decline. So, keep it in perspective. But I also don't think the sell-off was a natural event. I think it was orchestrated. I think the Trump administration was behind it. I think a lot of his friends made a lot of money off of it, but I think it was a coordinated attempt to basically, put out the fire from gold and silver, because I think gold and silver were basically warning that a dollar crisis was coming and a sovereign debt crisis. It was a real vote of no confidence in the administration, in the Fed. And I think they had to do something about that.
Do you think that mining stocks are still far cheaper than they otherwise would be? And why do you think that is?
Yeah, I think that the investment community does not understand what's happening in the precious metals.
Mhm.
And they think that this is a bubble, and probably what just happened in the last couple of days validates that. And so they don't think the high prices are sustainable. And so they're not willing to attribute a big increase in earnings, future earnings, to these mining companies if they don't believe these high prices will last. I think they're wrong. In fact, not only do I expect the high prices to stay, but I expect them to go even higher. And so I think the markets are completely wrong in their assessment of what these companies are going to earn in the future. And so their present price is, a huge bargain. So I think the people that understand why Wall Street has got this wrong are buying. Most people don't understand that. That's why the prices are so low.
Perhaps.
Yeah, I mean, I think it's a great opportunity for the physical buyers. I don't know where the bottom is, but I also can see that the premiums are widening. So to actually buy gold and silver coins, let's say for me at Schiff Gold, those coins have not come down by the same amount as the silver, because demand has actually moved up in the physical market. More people want to buy these lower prices, but we don't have the supply. So the premiums on physical are widening, the gap between the value of the melt value and what you have to pay.
Trump orchestrated the silver crash to hide the dollar crisis. Insiders profited. Bitcoin is collapsing, with Saylor barely breaking even on 55 billion golds. 10 times rise proves the Fed should be tightening, not cutting. The coming economic collapse will empty shelves only physical gold, silver, and mining stocks offer safety.
So I think they coordinated the raid with the early release of Trump's Fed pick with false talking points to disseminate to the media that somehow this was some huge surprise and that Trump had decided to appoint an inflation hawk who will be much more hawkish than Powell and far less likely to cut rates. In fact, likely to start raising rates almost immediately, and less likely to use quantitative easing, more likely to resume quantitative tightening. That is the story that is being sold. And I don't buy it. I mean, I just think that's complete BS. But I think Trump was confronted with a situation that he needed to diffuse. The world was questioning Fed independence. They expected the next Fed chair to be a puppet of the administration. And it was based on that preparation. That one of the reasons that you saw such weakness. Dollar hit 4-year lows, all-time record low against the Swiss franc, record highs in gold and silver. So they had to do something to push back against that narrative. And this is what they coordinated. And but I don't think that's true. I don't expect an inflation fighter. I expect a puppet. I don't think that Trump would have given Walsh the job if he really expected him, in his mind, to be worse than Powell, right? Because the reason he doesn't like Powell is because he hasn't cut rates enough. This guy, may even raise rates the way he's being portrayed. And maybe what they tried to do is nominate somebody who looks like a independent choice, who's not going to just do what Trump wants, but who is a real inflation hawk. Then when he goes and cuts rates anyway and does exactly what Trump wants, they'll be able to pretend that this is independent. They'll say, look, I appointed this hawk. If he's cutting rates, it must be economically justified. I mean, there's no political pressure here, right? I didn't appoint one of my guys. I appointed somebody who is, a hard money guy. And so I think that's part of the plan, right? To try to make it look like he's exercising his own judgment instead of just doing what Trump wants. Mm-hmm. So, but at the end of the day, I think the momentum out of the dollar into gold and the silver is going to continue. It may be slowed down. In fact, it was slowed down by this, but it's not going to be stopped. The only question is, how long will people be afraid to buy gold and silver because they're worried about this happening again? But it also is possible that now that we've got this big decline out of the way, people may feel more comfortable buying, thinking that, okay, it's already happened. Now I can step in. Obviously, buying silver at 76 is a lot more appealing than buying it at 126 or 121 where it got to. Mm-hmm. And, buying gold at 4,600 is better than 5,600, I mean, a lot of it depends on how we react to it. Mm-hmm. But, you're going to see it as a consumer. You're going to see it in that prices are going to go way up. I mean, much more than everything we've seen. And it's not just that prices are going to go way up. I mean, a lot of things are just not going to be there. The shelves will be empty. Mm-hmm. We may have rolling power blackouts. There may be price controls. There will be a substantial increase in unemployment. The markets will be weak. It's going to feel very bad. I mean, it's going to be worse than anything any living American has ever encountered as far as an economic downturn. I mean, you'd have to go back to the Great Depression, but this could easily be worse. Yeah, I mean, clearly, the shorts were in a lot of trouble, and now they're in less trouble, but probably because they now have an even bigger short position. Mm-hmm. So all this does is kick the can down the road. Doesn't solve the problem. It makes the problem worse. Again, but that's what Washington does. It's all about extend and pretend, right? It's not about solving problems, but preventing them from blowing up while you're on the job, right? So that's really what it's about. It's, push it down, push it back. And so hopefully, according to Trump, their goal is just to make sure the music doesn't stop until somebody else is president. Then he doesn't care, right? Because he could leave and say, hey, I did a great job. Look, this guy ruined it all. Well, I mean, Bitcoin was already selling off. The whole time gold was going up, Bitcoin was going down. Mm-hmm. And then, a lot of people expected that the money would rotate from gold and silver to Bitcoin, especially when we had that big drop in gold and silver on the Thursday, Friday. People expected, okay, the money's going to come into Bitcoin. Instead, Bitcoin had a big drop over the weekend. So not only did it not catch a bid from money leaving gold and silver, it got tanked too. And so, I think the Bitcoin trade is likely over. I've always thought it was a bubble. The bubble obviously got much bigger than I had expected when I first recognized that it was a bubble. But the air is coming out. Most people don't recognize that. Mm-hmm. And, I think that the main reason that the bubble got so big was gold went sideways for 12 years. After it had moved up from under 300 to almost 2,000, it, consolidated. And that allowed the Bitcoin community to kind of get the gold community to move into Bitcoin as digital gold, because Bitcoin was going up and gold was going sideways. And so everybody in Bitcoin was making a bunch of money and people weren't making money in gold. But now that gold is rising, it's hard to convince people that they need some alternative, that Bitcoin is better. Because even though Bitcoin has delivered great returns, if you bought it 10, 15 years ago, it hasn't delivered good returns if you bought it more recently. I mean, the best example is Michael Saylor himself, who is the biggest Bitcoin buyer. He's been buying it for over 50 years. He spent, close to $55 billion buying Bitcoin. And his average price on all that Bitcoin is just over 76,000. And right now it's 79,000. Right. So he barely has a gain. He would have been better off just, buying T-bills. He'd have more money. Now, the stock did better because he bought Bitcoin, because the fact that he was buying all this Bitcoin made people want to buy the stock. But the Bitcoin itself has been a lousy investment on its own, which should prove that all the hype was BS and the stock should come crashing down, because there is no actual benefit to MicroStrategy shareholders from owning all this Bitcoin. And the other problem is, of course, his meager gain is only on paper. If he actually tried to realize the gain by selling the Bitcoin, the price would collapse and he'd have huge losses. So he's in a very difficult position where he has a highly concentrated position that he can't sell. And I think that's why he keeps buying more, because it's his buying that is preventing an even bigger drop. But, there's a limit to how long he can do that. And now he keeps upping the money he's bribing the convertible preferreds, or, to make believe that there's a viable instrument there. It was 10%, then it went to 11%. Now it's 11.25%. He keeps increasing what he's paying, despite the fact that they're losing more money. The one restaurant, because I ate mainly at the conference, but one night I went out to dinner and I jokingly, asked the waitress, because I was eating with Anthony Pompliano and his brother. And I was like, when the waitress came and I said, do you take Bitcoin? She kind of laughed and then said no. So they wanted dollars. They didn't even want. So even in El Salvador, they don't want Bitcoin. So it's a myth that it's all running on Bitcoin. It's not. It's definitely changed from what the chair is willing to admit publicly, because you never know, what's going on behind the scenes. And, Jack Nicholson and a few good men, he's not telling the truth because he knows that the public can't handle the truth. And so the same might be true with Powell. But when Greenspan was Fed chair, he specifically said that he followed gold as his main indicator, and it was a market mechanism to let him know if the decisions they were making were correct. So if the gold price was moving higher above 400, that told Greenspan that we're too loose and we need to tighten up. If gold went below 300, that would be the market saying you're too tight. You need to ease, right? And he said that this, in a way, was a de facto gold standard, because gold was the barometer that he was using to guide him in his decisions. Now, Powell just said the other way, the Fed doesn't care about gold. Couldn't care less what happens to it. It's meaningless. Mm-hmm. And so the point I made on X is, well, who's right? Because they both had the job of Fed chair. So was Greenspan completely wrong? Or is Powell completely wrong? And, I think Greenspan was correct. And the fact that gold was under 400 when Greenspan made that statement, and it's well over 4,000 now, over a 10x increase, that would suggest that interest rates have been too low, that the Fed has been too easy the entire time, according to Greenspan. And I agree. The gold price is telling you that. The Fed should be reacting to it. They should be tightening, but they won't do it because they know that, our over-leveraged economy can't handle it. When Volcker, raised short-term rates to 20%, it wasn't that he did it because he thought that would be good, that everybody would like that. He knew that it was bitter medicine that needed to be swallowed. And we had the worst recession since the Great Depression as a result of those high interest rates. But I think the problem now is the Fed realizes that if we swallow that medicine now, it'll kill us. We'll die from the medicine. So we may as well die from the disease, because that's going to be later. Right. And so I think that's what's going on.